And I guess the challenge when you've talked about a lot of things there, but a lot of what you've just talked about is also related to emotion, isn't it? Because there's emotional feelings that come in when a trade goes well or when a trade doesn't go so well. And guess how do how can traders remove that emotion from their process and their activity and their trading plan? Because it's very difficult, isn't it? You've had a plan in place, you've identified what something's going to do, and then it doesn't go that way, and you brain human tendency is to become down and to become emotionally attached to that, and then to more. So how can traders keep emotions out of trading, which is probably a difficult thing to do, but I guess it's some of the things that the really successful people do.
Yeah, it's really important. I mean, you've talked there about process and plan, which I think are two parts of keeping the emotion out of trading. It's so easy to get wedded to a particular stock, a particular commodity, and if you do that, you find it very difficult to close out that position, whether it's to take a profit or to take a loss. You've got to think of it you've got to think of every market just as a market, nothing to get attached to. You've also got to really remember that markets are not out to get you. Markets will do what markets will do, and that's why it's so important to go in dispassionately, have a trading plan, have an idea, understand where you want to buy or sell and why, where you want to get out of that trade, where you need to have your stop, and to just be mechanical about that. Have a process, understand risk management. In other words, what are you prepared to risk on each trade, and bear in mind that risk. Your risk capital is capital that you can afford to lose, and it's not going to keep you awake at night if you do lose it. So there are all these things that go in, but ultimately it is having a plan and designing a process and sticking to that plan. And as you say, don't get wedded to an individual market.
We're going to talk about risk management in a moment, but how would you, if someone said to you, could I journal? What do you think about journaling and in a journal of my trades? What would your thoughts be on trading journals and keeping a record of things and what you've done and how you've done it?
I think it's a very good thing to get into. I think it's a very important part of the process. If you do keep a journal, you're hopefully writing why, about the market, why you decide to buy it or sell it, why and everything into that, and also at what point did you close it? Did you close it at a profit? Was that profit what you expected to make? Did you take a loss? Did you stick to your stop loss, or did you cut it before then, or did you do something awful like move your stop loss? All that stuff should go in there, and if you do that and keep going back to it, where not just you're losing trades, you're winning trades, everything, that can help you find sort of problems with your process and sort of identify where, maybe over time I see that this is what I keep on doing. I can't stop myself from doing this. And then if you identify that, maybe you can do something about it. So yeah, I definitely recommend doing a journal.